Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's update the euro currency, our view on the European Union currency. So what's going on? Actually, it's today's last update of this year. So next time we will meet on in the next year. So of course we're trying to prepare the weekly report as usual. So the pullback actually that we have discussed recently has started, and it started not only on the euro currency but on the 10-year yield, as you can see. It's minor pullback stance, and actually on the dollar index. And the dollar index, it looks really very well, not as strong as in the euro. In the euro, this is a bit stronger performance, while in the dollar index it stands very small. So it's actually doesn't make any impression by far. So on a daily chart on the euro currency, we see this downward reaction. So yesterday we said that probably this target had been passed without any response right here. But it seems that this might be the reaction precisely on these targets, despite that market has climbed slightly above it. So, but it actually doesn't change anything. So with the targets that we have set and discussed for possible destination point of this retracement, they're absolutely the same, whether we treat it as a reaction on these targets or just treat it as a separate retracement, it doesn't matter. So actually we're still watching for the 30% pullback here. The reasons of the small retracement stance is actually based on a few reasons. First is the overall situation in the financial markets, where everybody just following euphoria and expectation of the Fed cut rate and more diverse statement in the January as well. Second is, from a technical point of view, market has no significant barriers right above the market, above the current price level. So this is not at the verbot, no fib level stands above it. So actually here is a relatively free area. This market should pass without any big problems. And that we have here is just a tactical pullback and reaction on the targets or downside retracement. Maybe also here's some profit taken before the weekend and holidays. This was once again will be long, extended. United States 3 days, and Europe in 4 days. So investors probably today, Friday, prefer to just close the position, don't hold them through the weekend, because what will happen for the weekend is difficult to say. So on the 4-hour time frame chart, we're considering the same levels. As we said, it is preferable to see that market remains above the neckline of our hand and shoulders pattern. From that standpoint, two levels are suitable for our retracement. This is 1043 and 109.80, approximately 110 roughly area. So these two levels we are mostly watching for. This market could reach, as we're on the way in the retracement, deeper pullback back to the C point. It will be a bad sign for the bullish context, and it seems absolutely irrational in the current situation, where we see the acceleration on the daily chart with the upside action. So it will tell that something is changing in the sentiment, and the normal situation market should not show so deep retracement in the current environment, because we are not at the overbought. It's just minor target has been reached, which is a COP. Usually such kind of retracements and deep in the 618 almost never happens on the COP if everything goes well, if everything is okay. So that's why just following the probabilities, we're watching just for these two legs, two levels. On the hourly chart, the pullback has started, as we see, and now we have an extension. First target that we have for this ABC top pattern stands right here. It creates an agreement with the confidence support on the hourly chart. Here's also might be the minor butterfly to be formed, which could actually finalize action to the OP. It's approximately 1046, and we have a confidence 1050. So it's mostly stands in the same area, the 30% level right there. So here's the first point where you consider taking a long position. So it's well, it's a different question whether you would like to do this on Friday. If you're a scalp trader and you count that probably today could happen some bounce and you will be able to move up to the break even, well, this is the level to consider. If you're in general planning to take the long position, but you're not sure that you would like to buy here, as usual, very common to use the scale in method. So just take minor position here, about 30% of your lot. If market drop down, completes the XOP around 110 area, which is actually will make an agreement with the same level right there, circumference, you'll take the rest and the bulk of your position right here. But if market starts upward action right from this level, you at least will have some position to trade with. And very simple logic. That's technically, I explain everything what we have currently, but here's some psychological money management question concerning the taking position by the end of the year and before the long holidays. So this question you will have to resolve by yourself, whether you would like to do or not, or postpone your trading on next year already. So this choice is up to you. But by the technical picture, these two levels we are watching, and actually market could touch the first one already today.